Ryan, if you're talking, we can't hear you, mate.
Oh, here I am. Morning, everybody. Welcome to the Flow Show. Friday at last. Feels like I've worked a month this week. Morning, Kay. Holding up?
Morning, Ryan. Yeah, I mean, a shortened week feels like like a longer one than usual, isn't it? But yeah, we're ready for the last day of the month, and then we'll take a break over the weekend at least.
Yeah, very much. I'm buggering off after the Flow Show, so I'm going to have a little extended weekend with the family. Right. Let's get stuck in. But before I do, this is it. It's disappearing this weekend. Our 40% off sale. If you don't take it now, you ain't going to get it. So if you've been umming and ahhing, sitting on the fence about it, this is your last chance to have a go and get that deal. Use it or lose it, as we like to say. Right. Anyway, let's crack on with stuff. Bit of bad news, well, sort of bad news from Mr. Bessent, the US Treasury Secretary. He says US-China trade talks are a bit stalled, and it's now apparently going to require both Trump and Xi to speak directly to get things going again. I don't know if that's just a little bit of a play there to get a conversation finally between Trump and Xi. We'll see if that happens. Some of the sticking points are China giving access to their rare earths and deals on that side of things. But Trump has been pushing for calls with Xi, although that's not been reciprocated on the other side. So as I say, maybe this is a little bit of some games being played to see if that can happen. Moving on to Japan, and good news for the BOJ. We had Tokyo CPI out overnight and some decent numbers. Core CPI rising to 3.6%. Tokyo CPI, the headline CPI coming in at 3.4%, which would have been a drop, but the prior month got revised down to 3.4 as well, so it came in unchanged. So on the inflation front, these are the first CPI numbers for May that we get from Japan a couple of weeks before the national numbers. We also had some retail sales data in as well. Large retailers up 0.5%, so nice turnaround from the negative 1.2% previously. Retail sales overall year on year coming in hotter than expected as well. There's some industrial production numbers in there as well. They're a little bit all over the place month on month, down 0.9%, which was not as bad as feared. But these can be pretty volatile numbers. Anyway, overall, inflation still going the right way for Japan, and Mr. Ueda, who was out and about as well, saying that he's aware of firms' continued aggressive price and wage setting. Says their inflation forecast downgrade reflects global growth pressure, easing cost push, and a drop in oil. Says they set short-term policy rate to hit their inflation target. Also said they will incorporate various inputs into their June JGB buying review, saying it's taking time to decide how to dispose of the BOJ's ETF holdings. This review is an overall review of what they're going to be doing in terms of buying JGBs. In the meantime, though, they've announced that they're going to be planning to buy bonds in June at the same pace as May. Market probably looking to see if they're not really looking to see if they're going to change how much they buy, but where they're going to start buying it. Is that going to come in the review, do you think, or we're going to get this in the monthly updates?
It could be during the review, could be over the next Bank of Japan meeting. They could also leave everything as is and just do unscheduled bond buying, which is still where I'm kind of at. But yeah, they have various opportunities to change it. They could actually just I don't think they will. According to what Ueda has been saying, it doesn't seem that he plans to change too much to any of the tapering, etc. But we will see if they stick a level on to where they think the level of their JGB holdings should come at, and that may be the hint that the market is going to get in finally.
Yeah, absolutely, mate. And what do you make of those CPI numbers? Is that going to push them over the line in June, or still keep them on hold?
Market doesn't expect it, and I don't rule out there any meeting still. They could. Now, he did, and some of the Bank of Japan members said that they are monitoring those long rates, so that could hold them back from doing anything. He could hide behind real wages, still not ramping higher as they would like to. But in the facts of inflation, there should be nothing to hold them back from hiking. So it's a very, very fine line there that they are walking. We've heard from the sorry, we've heard from government MOF that they are going to shorten the maturities on their bond issuances. Is that going to influence them as well? Because we know that the interest rates, the monetary policy influences rather the short-term rates. If the government issues more of those shorter term JGBs, is that going to influence the BOJ as well to hold back, not to put the government in danger? Because my feeling, or my thinking between the Bank of Japan and the government, Bank of Japan is probably one of the least independent central banks out there. They have a very close cooperation with the government. So yeah, let's say we lean towards a hold, but I'm not going to exclude a hike. They did surprise us after all in December as well.
Yeah, and they're also hiding behind the same tree as everyone else regarding US and tariff threats and uncertainty. Is a big old tree everyone's hiding behind. But we might get a little bit of clarity on that because Japan's Akazawa, their trade minister, if you want to call him that, says he's likely to meet Besant today, US time. So we may get some comments from that. And if the uncertainty, if they get a deal done, deal in play, that might remove the uncertainty and allow the BOJ to press the button once again on a hike. But we shall see. Pierre Mishiba spoke with Trump yesterday. Didn't really give us much. Said they discussed diplomacy, security, and the economy, and that was that. But a Japanese government spokesman was out overnight saying, among other things, that US tariffs have not significantly affected firms yet. So they're not seeing any large negative impacts yet. So it's all going on over there. But I think, yeah, if they get a trade deal with Trump, or at least the basis of one, I think that's one big obstacle removed for the BOJ. And if it comes before the June meeting, who knows? We could have a
It's
little
possible.
surprise. Yeah,
It is possible.
absolutely. Yeah,
Because Japan is now playing the game of we're investing in the US, so don't tariff us. And Trump, that is one of the things that he wants, is that people invest in the US and create US jobs and things. So that is, I guess, a very good negotiation tool to have. And Japan has been open about it as well. I don't think there's going to be, to be honest, I don't think there's going to be anything said or at least let alone done on the currency front. But I'm still leaning towards them getting a deal just because of those investments in the US.
yeah. When is the next meeting? I'm just having a quick look.
Well, I
Just
think was Kato not trying to talk to Besant by the end of the week as well? I meant to have read that.
okay. how many
Calendars
times? How many
calendars
times?
change.
Oh,
Yeah, calendars change as fast as I mean they are
yeah,
just quicksand these days. The calendars.
yeah. Well, June the 16th, 17th. Well, 17th will be the
Really?
release of the announcement, the policy announcement from the BOJ. So,
Oh.
don't know. Maybe next week we might be in the zone for start getting some sources pieces dropping, perhaps. We need to keep an eye on that one anyway. But yeah, I don't know how many times is Kate going to ask him if FX is okay with Besson.
So far, there's actually nothing has changed. I mean, we're at the G7 statement, and which was underwritten by the US, I guess. said that they are still on the 2017. That is no competitive devaluations, etc., etc. But Japan said that is that is how we handle it. I mean, we don't manipulate the yen lower. We never did, although that is questionable between Abe and Kuroda, obviously.
Yeah,
But those days are gone. But they do not manipulate. If anything, they intervene to not let the yen weaken too much. So I
yeah,
don't think US has too much of a foot to stand on regarding FX.
yeah. Right, over to down underland and a bit of data out of there. Some retail sales coming in a bit soggy at minus 0.1%. So that wasn't looking good. There was a little bit of a dip in building approvals there as well, down 5.7%. So something for the RBA to keep an eye on. Over at the Bank of England, Bailey was out waffling, not a great deal to note, but says uncertainty over the trade outcome poses the bank's current challenge. Says the UK economy is hard to read and market fragilities are under watch. Says UK rates will be driven by domestic issues, not tariffs. And says that core inflation components are easing gradually. The German government decided to wake up and look to introduce some some taxes on Google and Meta advertising. They want to stick a 10% tax on the advertising revenue from those guys, which no doubt will go down well with Mr. Trump over in the US. Bit of data out from Germany as well. Retail sales coming in soggy, down 1.1% on the month instead of the 0.2 positive expected. Although year on year it was a bit better off on the whole. We also had the regional German CPI numbers, which by and large came in round about unchanged. And there was a couple up and one down and whatever, so no real change there. All hovering around the sort of 2 to 2.3% mark for that. We get the main number later on. Spain CPI out as well. And the Eurozone measure coming down a chunk to 1.9%, more than expected. Same for the CPI number as well, come down to 1.9%. So more victory laps going to be coming in there. Oh, there's all the German regional numbers there. Over to the ECB and the Reuters poll, 81 economists, all of them expect the deposit rate to be cut next week's meeting. And 71% of those say the ECB will then pause in July. That was compared to 68% in the April poll. So we're getting a cut and then they're going to go and pause according to those economists. ECB's Panchetta says disinflation is now close to completion. Prior rate cuts leave less room for more cuts. So he's more on the dovish side, or has been on more on the dovish side of the scale. Now he seems to be moving into neutral. So we've got the Hawks calling for a potential end to cuts. And now we've got some of the more dovish moving into the middle as well. So I think, Kay, what do you think? Do you think we get a cut and then a pause, or
Yeah,
could we get a cut at this one?
yeah,
Could we get a pause at this one?
yeah. I think that's it. ECB usually does not overly surprise on the monetary policy front, but the uncertainty is big enough to build in a pause a bit later. Which what is interesting is that, as you say, Panetta or Pancetta, as we call him, is the doves are slightly moving towards neutral. And those who were hawks before and went to neutral or even dovish at one stage, if you look at some of them, even Nagel and, Nagel and Schnabel were calling for a cut earlier, but they have already moved back now to what is it's less of a guarantee that we continue. So I think there may be a bit of a debate, but I do think that they will cut next week. What is interesting, though, is that most of the ECB bots now are okay with what is going on in the euro. Yeah, we know that a stronger euro is fighting inflation, so that does a part of their job as well. But the way that they bring it over, it feels like, okay, guys, if people don't really want to hold everything in dollars, we're okay as a eurozone that you guys come to us, and that's I think very quite interesting because the ECB is usually not talking that way. They rather they are rather actually counterproductive for the euro most of the time. And I find this is a little bit of a change. It's part and parcel of the whole tariff saga, right? But I think, and I find them interesting comments.
Yeah, and yeah, I think it's the way the money's coming in and where it's going. You know, if you got money coming out of the US going into European debt, that helps with things as well. So yeah, it's all the circumstances with how it happens. I think I can't remember what Draghi's comment was way back. I think he said, if I get this the right way around, every 10%
Yeah.
move in the currency adds or takes away 4 points from inflation, or
No,
adds.
one. Is it not 10 for one?
I think it was 10 for 4.
Really? Wow.
Well, 0.4. I'll have to look
Oh,
it up.
was it? Okay.
Yeah.
Right.
I
I
mean, we
think,
have to go back to what, 2000 and, well, clickety click. Can't remember. It was something like
okay.
that. I thought it was something like 0.4% either way, or for
I think,
one.
yeah, I thought it was a bit more, but anyway, this is,
Moot.
yeah.
We're not going to
I
fall out
just
over
found
it.
the thing is as well, Ryan. If ECB says it's okay for you guys to hold some euros, diversify away from the dollar and hold some euros, it brings money it brings investments into Europe, and they are going to need some of it because fiscal side Germans want to spend a lot, and all of it. It's going to help on that side as well. So I think there is a bit of political gaming going on there as well.
Yeah, and we have to remember when some of these comments were made, we were at far vaster levels than we are now. This is relatively stable at the moment in the euro. If you're talking longer term, price action, sort of 105s, even 120s, that's a pretty steady range to sit in. If we were up 130s, 140s, that's when they would start to panic about the level of the currency. So, yeah, I've got to take all this stuff in context, I think. Right, anyway, back to the data, and we got a revised first revision from US GDP for Q1. It was a little better than expected, or at least a little better than the flash number by a pip. So that was all well and good. However, there was some worse numbers. Sales coming in worse, down 2.9%. Real spending coming in worse in the revision to 1.2%, though it's still a positive. So we can take that away from it, but a little bit weaker than the first number. Pending home sales, that might be showing a little bit of a wobble. It fell 6.3% on the month. I'm just going to check this one because that was a 5.5% gain the month before. So I'm just looking to see if it's a bit of a washout, if it's going to load on me. You're going to load? There we go. So, yeah, we had that gain there. So no real trend happening there. We do get some fairly big swings, but nevertheless, we're going to be watching for if we get some trends forming. That's when we need to be worried. But -1 nonetheless yesterday. Fed's Goolsbeast says if tariffs are avoided, we could return to a situation where rates come down. It says if politics control the interest rate, inflation is coming back. Sometimes central banks have to do what political apparatus don't enjoy. It says stagflation is the toughest scenario for a central bank, but that's not what we are facing now. It says the US is in a stagflationary or going in a stagflationary direction, but is not in stagflation. Fed's Daily says the labour market is strong and the inflation fight is ongoing. And that 2 rate cuts are possible if inflation falls and the labour market holds. We've had some more reaction to this court ruling on Trump's tariffs. Canada PM Carney dancing a little jig. Says he welcomes the US court ruling on tariffs. Says Canada is still being hit by unjustified US tariffs on steel and autos. Others are a bit more in wait and see mode, like the UK. Mexican Prez Scheinbaum says we'll wait to know the scope of the US court ruling on tariffs. There was also a second case upheld by the US court. This was brought by a toy company. They've also blocked Trump's tariffs too. In the meantime, after that court put the block in, Trump administration has asked the appeals court to pause that tariff ruling, and that they may ask the Supreme Court today to keep the tariffs intact. However, since that happened, or since they spoke about that, the US appeals court has reinstated the tariffs during this appeal. They've temporarily halted the ruling against the tariffs, and the Federal Circuit Court, or whatever that is, says it needs time to consider the filings. So we're in a bit of a pause mode at the moment. Navarro, he was talking about what happens if things do go wrong for Trump in the courts. As you can assume, even if we lose the tariff cases, we will do it another way. One of those ways is a law that's in play that could be a bit of a stopgap measure, where they can impose tariffs on large parts of the global economy under an existing law that allows them to add tariffs up to 15% for 150 days. So, as we were saying yesterday, there is going to be lots of ways they're going to circumvent this ruling, even if it goes against them. Lastly, we did have a 7-year note sale, just keeping half an eye on it, see if there's any wobbles. It was actually looking fairly decent. The rate coming in lower, the high yield rate coming in lower than the when issued rate, which is good news. And there was another jump in indirects, i.e. foreign buyers, 71.5% from 59.3% previously. Bid to cover also up on that one as well. We've got PCE coming out today in the US. Powell tipped the nod on the 15th of May again, saying it's going to come in at 2.2%, and that's where expectations sit. However, he didn't give us the insight into what he thought the core number was going to be. So no idea on that, but the market looking for 2.5% there. So if he's on the money, then this data is probably not going to be a big mover. If he misses though, or if he's wrong and we get a big variation, then we might see a little bit of movement there. We also get Canadian GDP after that as well. This is quarterly and the monthly number too. So just keep an eye on that if you're trading the loonie. And then we get the final Michigan numbers coming in later on from that. Okay, anything else you got, or anything you're looking at today?
There was this, and I don't know where they got it really. There was this article that Gav posted in our newsroom. For those who are not in our community, we have this news and research room as well, where we post a lot of stuff. And there was this interesting little article saying that Japanese life insurers cut bullish yen hedges to a 14-year low. I don't know why they cut their hedges against the bullish yen, because as we have been talking about, if Japan gets a deal, it should probably be a little positive yen perhaps. But they are seemingly not expecting the yen to strengthen too much from here, which is relatively interesting thing. I'm going to add Japanese corporates and Japanese whales. They may be half decent with their investments in bonds and government and foreign bonds. We know last year they had record profits expressed in yen, but they are not known to be the best forecasters for the currency actually. So well, let's take it with a pinch of salt. But it's interesting that they would have reduced their hedges against the yen.
Yeah, absolutely. And you can get that, as I just showed. I'll show it quickly again. We have a newsroom, which if you're coming in to our platform and you want to check out stuff that's happened overnight, our mate Gav is very good at popping up, doing a review of all the stories and putting up the important pieces, as are all the other boys and girls in the room as well. So that's one part of what we do, make sure you're up to speed on all the news that's happened and when it happens. Right, that was it. There's not much else on the data front to look at, so let's move on from that. Let's come into some of the decent charts, a bit lower down. Let's go on some of the hourlies. Right, I'm going to have a look at dollar yen because I've been trading this one over the last day or two. We had a little bit of a washout overnight. Got down to the 143.45 level, which is a bit of a level I've had my beady on. We've had a bounce. We are struggling to get moves and hold moves above 144 at the moment. But just keep an eye if we're trying to do that now, because that might suggest we've got a bit of a bottom in play. This is really going to be a pivot point, I think, for today or however long. So look and see which side we are going to sit on. At the moment, we're looking like we're trying to have another go at staying in there. We just got a little bit of a bounce up trend forming on this one. So it might be we've finished with all that news, and if we're going to go lower, it's going to need some other input to get us there. But as I say, if we fail to hold this 144, then we might be heading back down to those lows there. A little bit in the mix, lots of stuff in the mix for why we made that low. K, the data, UADA, government, whatever, Yeshiba.
Yeah,
Does it look
fixing.
like it's a bit of a last or a bit of a stretched move now?
Well, we will see because okay, last fixing of the month, all those other little factors, the data, the CPI, US equities a bit lower, US yields a bit lower, which we know is always very important for the yen as well. When we have that correlation, I don't know, mate. I mean, we could, in theory, see a last little hooray into the London fixing perhaps this afternoon. But again, if we base ourselves on the fact that Japan still, which I would assume that they will get a fair deal. Um, I think that 146 where you hit it was a pretty cool level to be short. I'm the thing here, I reckon anyway, is not to go and chase moves. Um, but yen is one of those when you're in a position which makes sense, like the one that you are in now for the yen at least. It's also another currency pair where I would like to, just because we go to a level, start to counter it. People
Yeah.
are asking if you're buying dollars, Ryan. I no, Ryan is short, if I may. Um, so no, I think you have a pretty decent trade there on your hands because if I would see a bit of a revival, and it's stupid because I was in front of the screen when it was 146, and even on our shows and on Face I mentioned that 146 as being a good level, but I didn't trade it myself. No, I think you got a fair little deal there, and you know what, I'm we know that markets can change from day to day, but will we not get a little bit of speculation, even if the market is thinking that they don't budge at all on the next meeting, but will we not get just that little bit of speculation that the Bank of Japan may do something and enter the meeting at a lower level in any yen pair? See what I mean?
Yeah, yeah, no, I think so. But if we get a trade deal headline, is that going to be good for the yen
I
or
think
good for
so. It's good for the
or
yen.
risk?
Should be.
Should be. Well, I mean, you can't you can't tell 1 minute for the next whether
No,
it's
but
good
that's
for the dollar or bad for the dollar, the way
yeah,
it's
but
been down of late.
yeah, that's where I did not understand when that court ruling came out. As I said, I understood some dollar moves and stuff, but I did not understand the yen move because I had this it's expiring today. I had this call in sterling yen, and I hedged most of it when after the news as well because I said, hang on a minute. I mean, if they cancel tariffs, I mean the minimal chance exists that those tariffs should be cancelled. That should not be bad for yen. It's actually good for the yen, and then I think that's also the reason why the market then woke up as you did and went like, well, hang on a bit, this is actually better for the yen, and we see all the yen crosses lower. Not only the dollar yen, all the yen crosses are lower as well.
Yeah,
And that's
very much.
a very good barometer for yen strength or weakness.
Yeah, and you're right. You say it's, and we've been talking about this in the chat room. You can't chase moves in anything at the moment. We saw some big moves happening, and yeah, it's you can't chase if you don't catch a move, don't get the FOMO and chase it, because then that's when you end up selling bottoms and buying tops. So yeah, and like Kay says, and we've been saying it this week, you got to be careful with your levels. You've got to wait for a bit of confirmation. 145. I traded that first time short, got knocked out, took some profit out of it, but got knocked out on the rest in that move, and then all of a sudden we're back down below and it's resistance again. So you just got to be a bit careful. But no, I'm short, guys, and again, this is a benefit of being in our chat room. This is our trade room. We list out what we're doing, how we're doing it, and keep updating on what's going on, moving stops and whatever. So if you're in our chat room, you get to see everyone that puts their stuff in here, and we just started trying to keep it all in threads, so it's all kept together, so you can see the exact progress of what happens in trading. And there's K-Man there. Let's move on to that one while I've got that one on the screen. The old euro sterling. Do you do anything with yours? Are you still sitting in it?
Yeah, yeah. I'm good with that. We are in that zone, and then perhaps straight away answering to what Alice was saying on the euro sterling. Remember, Ali, yesterday we were saying, and I was saying about euro sterling. I don't feel like it, to be short right here, even if 84 was capped. And then what happened later in the day, we went through. I think there's a lot of month-end stuff going on, and unfortunately. And sorry for you to have been stopped, but we actually sold that rally. Um, we were actually reminded of the levels by Magix in our room, so had tip to him. Um, but yeah, I think there's a lot of month end going on, and even on the basis of the models, I'm not averse of being a little short, but from here up to what is it, 84 and a half at least. There's a lot of little levels. It's even up to 84.60 before you really
Yeah,
start
that's
to
mine.
change the trend, right? Or
Yeah,
to change. If you look at exactly where Ryan is pointing at, that 84.60, look left, early May, bottom, bottom, then we go later in May, top, and then and that's going to be perhaps a bit of a key level, okay? A bit of a key level. Of course, 85 will be psychological, perhaps, but fact is also is that if you look at all those bumps and recoveries. We did have recoveries on the way down, but they are still a bit short-lived. And there's still this underlying thing about Europe does not have any trade deals yet, especially not with the US. But UK is working on them, right? And whether they end up being like really good or not, the market sees that UK is close or having like this framework of a deal with the US. We can argue of the deal being good or only half good or something's bad with the EU, but it's there, and investors they look at that or asset manager or whatever, and then if you want to diversify and then they say like, oh, let's put a part in sterling because they are doing a bit of a job. In the meantime, Bank of England still does not seem to be in such a hurry. So they have that as well. So I think the overall picture, unless 84.60 goes or so, the overall picture is still pretty much the same. On the other hand, I wouldn't expect, unless we have something special for this month, but I wouldn't expect it like to drop like a stone either, right? It is still a granddad's currency paper.
yeah, exactly. It gives you it when it plays nicely with the levels. It plays nicely with the levels. I mean, our mate Magix was like, "Oh, Euro Sterling's up there," and I hadn't even noticed it, and it was up trading just around 20. So I thought, well, I'm going to hit that because that looks like a fixed move. There was no news behind it. Nothing of the sort. Euro was
And
bid
all
all
euro
around the
crosses, huh?
grounds. Yeah, Euro was bid all around the grounds. And there's times you just look at it and go, well, I'm going to have a go at that. Yeah, it did push through, but it hit again another small level. We've had messing around at 30s, and that's where it held, and down it's come. I think I might, if I get under 84s, then I'll have a little slice off. If we can't get through 84s, I might have a little slice off. But if we get another similar rally and it's looking like a fixed rally, even if it goes high, I might hit that as well and just build it in, because I don't think this trend is for changing just on what we're seeing in this sort of price action. Euro dollar. Who's asking about euro dollar? I own that.
We're short, Ali. We are short in euro sterling.
Yeah, we're short. I'm short at 18. Well, I think all of us are short around 18,
Yeah,
19.
I mean, I think a good few of us, we all hit the same bid.
Yeah, exactly. And I don't know what 38.2 you're looking at, mate. I don't know if it's 1K's got or something. But for me, we're again in wider picture terms, we're in no man's land again. We had this move to 112. We're not going up to 115 anytime soon. So this is a little bit middling. I'm not really interested in trading euro at the moment in all this noise, unless something really pops out. So I'll leave that one to Kay. I do want to pop out one before I bang it over to you, mate. And I put this in the chat room because I talk about this pattern a lot potentially happening, and we may have it happening in dollar mex. Now this goes against my position if this happens, because I'm short, but I'm short way above, so it's not potentially going to be something that's damaging. But we've had this situation where we've had this low and it was a solid low, then we broke the low, we're back above it. If we come back and test this 24, 25 area and it holds, that's going to be my, I don't know what you want to call it, my 1, 2, 3 pattern. Head and shoulders people may be looking at this to develop. I don't like head and shoulders first and foremost, but secondly, if I want to trade something like head and shoulders, I'm more interested in trading this early part than waiting for something to break on the neckline or whatever. So this for me could be something that's setting up that means we get a real strong bounce from this level. Even if it goes back to up here, the 40s, that'll be decent enough. So I'm actually looking at this one for a possible separate long, even though I'm core short from other levels. But just keep an eye on that one if it plays out. It could mean we get a stronger bounce, maybe back up through the 50s, even somewhere up to the 60s like that. So just one to keep an eye on. Kay, you had a little nibble in this one. You still in that bit, or you?
Mm-hmm. Yes, I am. And when I take over the charts, I will show something.
Yeah. Okay. I will give it to you now, mate. Boom, boom. There you go.
Well, first of all, I'm going to put you a jinx card on there, Ryan, for your dollar mix.
I need a counter card.
Yeah, because I sold it yesterday. Oh, no, the day before actually. No, was it the fixing before? Yeah, I think so. Just up in the high 30s against that 41, 42, which you rightly called as a level. It is, yeah, I'm still playing it from the same side because I don't think much is changing. I am going to cut some of it. I did actually already bought some back yesterday. Going to buy back more today. It's just an add to the original. And I'm not saying it can't move the way you are saying, because everything is possible, especially that next Monday we start a new month as well. It's not only the weekend, but we start a new month as well, and we don't know what's going to happen, obviously, starting a new month. So because that level in the low 20s, around 25, 20 is kind of important as well. My bigger zone is lower down towards the low 19s, but now it is a bit of a level, so I'm going to the ad at least I'm going to cover it. And yeah, so and just continue to trade around the core short, which we have. Well, you have been running it for a very long time. I had it in episodes. but the latest one is from the 1960s somewhere. So, and as long as we are short, it pays us a bit of money as well, which is a pretty decent thing to have in the mix. Okay, moving on quickly because I'm looking at the time. Gold, I know that there is another you always want to look at gold. For the time being, I don't have much, but I understand people trying to buy against this thing. I'm just going to remind you, metals do have month-end stuff. So I mean, don't be surprised if this afternoon we see a little bit of moves develop in the metals as well, because it could be a bit of month-end stuff as well. In the meantime, we are in this triangle. And I think the levels have not really materially changed. If you look at the top end of the triangle, is around the top that we saw yesterday. So that is around 33.30, 35. The biggest zone is still there. That zone here, even around 32.75, 80 is an interesting one to observe, and then 40.50s before the bottom end of the triangle. Next month, I expect this triangle to break. Okay. I don't know yet which side, because there's still a lot of uncertainty surrounding tariffs, etc., and deals made here and there, and even unfortunately geopolitical and war situations and things like that. So, but I'm expecting this triangle to kind of break next week at some stage. Okay. Um, let's go and have a look at some of the currencies. Cable. Somebody was asking about cable. Look, 134, 40, 45 is the first level. We interestingly held around on Wednesday, that was around that 38.2, which is also a bit of a support line. Yesterday left untested, this morning as well, and that comes in now around 134.40. There's a few levels there on the downside, but I still think those are still short-term levels, by the way. Okay, I mean, we are okay. This one is probably a little bit longer now, but that is only coming in around 134 the figure. But there's many little levels before we even start to talk about the biggest support zone here in the cable. We are the last day of the month. We are going to see those flows. Keep an eye on if ever we get back above 135, 10, 20, if it flies through. Keep your clocks close to hand, because it could be a fixing trade as well. Okay, so I'm just saying, and then look where we end up. Maybe at the close of the day, or even wait for the opening on Monday. I'm a tad holding the same position that I had from where was it? 33s or so. Yeah, here in the 33s. Then let some go, reloaded some, and then try to no, actually I reloaded some around here, and then let some go yesterday. I'm still always doing basically the same thing. Get like a position and then trade around the core. But 136, if we zoom out a little bit, 136 is a big level. Okay, so I if we would get a very big surprise move and we get down there, if we do it over the fixing, I'd be reluctant to think that it is really a break and we're straight away going to go higher. It's possible, but always be a bit careful with fixing. So any move close to there around the fixing time, I'm going to be a happy take profit seller. What were we talking about as well? Somebody asked something as well. Oh, the Aussie dollar. Very interesting. That was Mike, yeah? Mike on the Aussie, was it? Bit of a channel here that developed of late, and it held. Okay, we're holding that little channel. I'd argue it is not your most important, even if it is a 4 hour, and we've been building that. If you look at it for about of a month, I still think it's not your most important level. I think more importantly, we have those levels here, 63.90, that held 3 times on every attempt. To come down, and it bounced. Okay, now we bounced on the channel, but still, I mean, if we would get anywhere close, keep an eye on 63.90, and then obviously I would argue the bigger zone here is in the mid 63s. If that would go, I think that's not really going to be a very good signal for the Aussie. What I also note And I've been playing this from the long side as well. But I've been reducing the position because what I also notice, apart from this spike here, we're having trouble. We're really having trouble to keep rallies. And every time we get a rally, okay, this was the big dump in the dollar at some stage, but and every time we get a rally, especially I would say in the Aussie also, it's getting countered very quickly. So this is one of the currencies where I'm not going to be too greedy. If I see it anywhere closer to 64.80, I'll probably take the best part off and then see what happens there. But overall, still looking constructive. That's what I would say about the Aussie. Okay, Kiwi similar kind of thing. Kiwi more interesting is that it leaves the major supports untested. Okay, so that is interesting as well. I'd say the major supports for the short term is still that 58.90 figure, and it leaves them unchanged. We know that RBNZ was less dovish than the market would have expected or wanted. But look at what happened yesterday, 78.6, bang, stop, and we have rejected it. So again, if we see a move which would bring us anywhere closer or a bit of a wonder above, if that's the direction of this afternoon, be a bit careful for what happens after the fixings, perhaps. The big zone is still 60, 30, 40, okay? One, two, three, and really it is a level. There is just a longer term fib just above there. So don't hang your hat onto 30. I mean, if you want to play it on the other side, on the short side, don't go and place your stop at 33. I mean, give it a few algo pips. And at least up to that line here, 36, 38 something. Um, Still constructive overall and supports left untested, but that rejection here may be something that the market is going to remember come next week as well. And with that, Ryan, back over to you, mate.
Thank you very much, good sir. Great stuff from you again this week. Always a pleasure to hear your analysis. I'm sure the viewers are grateful for that as well. And thank you to our viewers for coming to the Flow Show this week and supporting us here. Hope you've had a good week. Don't go and spoil it today. If you have had a good week, watch out those end of month flows and have a great weekend, everybody. And we'll see you all next week.